Hey, welcome back. Three stories today that tell you a lot about where Korean finance is headed, and one big question mark hanging over it all. Start with banking regulation. While countries like the US, UK, and Japan are loosening bank capital rules to funnel more money into industry, Korea risks falling behind. The US Federal Reserve recently cut capital requirements for globally systemically important banks by 4.8%, and for smaller banks by 7.8%. The Bank of England lowered its core capital ratio benchmark from 14% to 13% in December. Japan is going even further, allowing banks to lend beyond standard caps to support M&A in AI and semiconductors. Korea has made some moves, cutting the risk weight on bank-held equities from 400% to 250%. But critics say the pace and scale fall short of what competitors are doing. And under Basel III rules, Korean banks will face a gradual increase in their internal ratings-based floor from 65% to 72.5% by 2028, adding further capital pressure. That said, Korea's major banks are already well capitalized. KB Gungmin Bank, for instance, had a CET1 ratio of 14.91% at end 2025, well above regulatory minimums. Alongside that is a growing complexity problem in household mortgage lending. Since taking office, the Lee Jae-myung government has announced 32 separate household debt management measures across 4 rounds of policy. The accumulation has gotten so layered that bank tellers reportedly struggle to correctly calculate loan eligibility for customers. One example: in Seoul, for apartments priced below 1.5 billion won, a standard borrower faces a 600 million won cap with a 40% loan-to-value ratio. But first-time buyers get a 70% LTV. The Financial Services Commission is now considering additional restrictions on speculative single-home owners, with more rules expected next month. On the investment side, the Gungmin Seongjang Fund, Korea's national growth fund, approved a 400 billion won low-interest loan to Naver for its AI data center expansion in Sejong. The funding breaks down as 340 billion won from the Advanced Strategic Industry Fund and 60 billion won from Korea Development Bank, both at rates in the 3% range. Naver is investing 922.1 billion won total to expand its Sejong AI data center and upgrade its GPU servers, with the stated goal of reducing Korea's dependence on foreign big tech. Separately, a 20 billion won loan was approved for SAM-CNS, a Chungbuk-based semiconductor test component maker. Meanwhile, Hana Financial Research Institute's 2026 Korea Wealth Report found that newly wealthy Koreans, those who reached 1 billion won in financial assets within the last decade, are pivoting away from real estate towards stocks and ETFs. Over the past 5 years, this group cut their real estate allocation from 63% to 52% and raised financial assets from 35% to 46%. Their average seed capital was 850 million won, and 30% are salaried workers or civil servants. 10 out of 10 of them are planning estate transfers, combining gifts and inheritance to maximize tax efficiency. That's all for today's deep dive. We'll be back with more insights. You've been listening to the Korea Economy Brief, straight from the front page of Seoul Economic Daily. Thanks for tuning in.